Good afternoon and happy Friday. Today on Money Not Math, I'm going to be talking about an article titled Four in Five Americans Lack Retirement Planning Knowledge, according to a survey on thinkadvisor.com. I'm going to go through the article written by Ginger Sala. I don't know if that's how you say her name, and add in my own commentary and reaction as I always do. All right, and I did go through and actually take the survey, which was quite interesting. I can see why it would be a struggle for people who don't study this stuff on a daily basis. But I do challenge you, if you are willing to listen or watch this video, to go through the survey yourself. I'll include the link on my post like I always do for you to click on the article if you'd like. And reach out and let me know how you did. I'd love to hear how you did and get your thoughts and your responses to the survey itself. Coming from someone who doesn't think about this stuff every day like I do, and I'll even be willing to share my score with you if you share yours with me. So today, in the article, she talks about how, like I said, 4 in 5 Americans lack retirement planning knowledge. And she says that most older Americans feel they are at least moderately knowledgeable on retirement income planning, but apparently that's a misconception, as 4 in 5 fail to understand the basics of how to successfully plan for a financially secure retirement, according to this study that's included on here, and it's in blue with a link attached, titled 2020 Retirement Income Literacy Survey. So the study of 1,500 Americans was done through online interviews between April 29th and May 18th. Respondents were age 50 to age 75, with at least $100,000 in household assets, not including their primary residence. With a troubled economy and an acceleration of early or forced retirements, consumer understanding of retirement principles is particularly important, said Steve Parrish, adjunct professor of advanced planning and co-director of the college's New York Life Center for Retirement Income, in a statement. Yet the survey demonstrates that retirement literacy remains troublingly low. Financial advisors should take heed of the situation and embrace the opportunity it provides to help Americans prepare for a successful retirement. Now, this whole statement is really interesting to me because I feel like two of the largest issues out there when it comes to financial planning in today's world are, I shouldn't say two, there's a few, but one, there's so much information out there that it's really hard to know. I mean, anyone can Google anything, right? Like, I can Google how to be a doctor, but it doesn't mean I can become a doctor just from Googling it, right? There's so much information out there that's really hard for us to understand what actually applies to you, what actually applies to your specific situation and your specific wants. So if you don't have a trusted financial planner that you work with, it can be really cumbersome and really inaccurate to just go based off what we find on the internet. Now, the second part of that thought for me is, even though there's a lot of really great information out there that could apply perfectly to your friend or your sibling or your parents or your neighbor or your coworker, it doesn't mean it works for you. And far too often there's these grandiose ideas or these books written or these articles written that people take verbatim, and they think that they apply them to their personal lives, thinking that it works for everyone. But as we know, in a financial planning world, there's no such thing as a cookie cutter plan. There's no plan that works for everyone. I believe every individual person and family's plan should be catered to their personal needs, wants, and aspirations, not just taking a book and applying it to everyone, for example. So those are two of the really big issues. And the third one I would add to that is, we've been using the same idea. Traditional financial planning has been using the same ideas for so long that we're finding many of them are outdated and don't actually work that well. So as this article points out, even though there's a ridiculous amount of information out there, it doesn't mean everyone's getting it or getting the right information to help them. So hopefully that, kind of gives you something to think about. And I would challenge you to take the survey on this article and really dive into your own personal plan and contact someone you trust to have a conversation. Even if you don't decide to work with them, just have a conversation and figure out, is having a financial planner that you work with personally the right thing for you? If you don't have that person, of course, I'm always interested in meeting new great people. And if we believe the same things, I'd love to work with you as well. So continuing on with the article, the quiz showed other major knowledge gaps in how to sustain income in retirement. More than half underestimated the life expectancy of a 65-year-old man, which suggests that many don't know how long their assets may last. So ask yourself, if you are 65 or when you're 65, are you aware of what the life expectancy currently is of a 65-year-old man in this country? All right. So more importantly, are you aware of how long your retirement planning assets are going to have to potentially pay you in retirement so that you don't run out of money before you run out of breath? If you don't know the answer, it might be a good thing to plan out or have a conversation around. The second point, only 3 in 10 people have a plan in place for how to fund long-term care needs. And only 8% consider it very likely that they will ever experience a long-term care need. Even though the reality is, here's a clue if you ever take the survey, the reality is 70% of all retirees in the United States of America will need long-term care needs at some point in time. So it's extremely important to have a plan in place to help you pay for those needs. Third point, only 32% know that $4,000 is the most they can afford to safely in quotations, withdraw per year from a $100,000 retirement account, suggesting most do not know how to manage a prudent withdrawal rate. So here's an extremely important point. Most people's retirement plans are invested through their 401ks, 403bs, IRAs, and other things like that. And within that, most of those investments are mutual funds, stocks, equities, and things like that. So it's dependent on the stock market, which we know can go like this, right? Up, down, up, down, up, down. It's not a consistent line by any means, especially when you add politics, world things, and world events and things like that to the mix. The stock market's kind of a crapshoot of randomness, right? To a certain extent. So with that, we have to be very understanding of how safe withdrawal rates work once you're in retirement. And what a safe withdrawal rate is, what percentage of your money invested in the market can you safely withdraw on an annual basis in order to more than likely not run out of money before you run out of breath. All right. So here's another hint. If you take the survey, they talk about how if you have $100,000 equity, you can actually only pull $4,000 a year, and that's the 4% rule, to be safe. Now, there's more literature out recently by economists that say that number is actually different and lower. But the point is, it's really important to have realistic understanding of safe withdrawal rates when you're planning around your retirement assets. So continuing on with the article, nearly 4 in 10 consumers reportedly feeling highly prepared for market downturn associated with the pandemic. And what made a difference in consumers' perception of preparedness was having a formal written retirement plan. So do you have a written retirement plan? Now, I'm not saying you have to write out like a journal or a newspaper, but do you have a plan like written down in some way that illustrates how you're planning on living longer than you, or not running out of money before you run out of breath, right? I always like to say, I'd rather plan in such a way that we have more money than we need so we can leave some behind than not enough so we have to live off those we love. All right, so in fact, those with a written retirement plan or a written retirement income plan reported feeling more prepared to deal with the market downturn. However, only 1 in 3 respondents reported having a written plan. So that's kind of concerning that only 1 in 3 people actually have a financial plan written down. Long-term care issues. The survey also found only 3 in 10 respondents had a plan in place to fund long-term care needs, while only 1 in 4 actually had long-term care insurance. Keep in mind, 70% of United States retirees will have long-term care costs in retirement at some point. And the survey says only 3 in 10 actually have a long-term care plan. So further, half said it's somewhat likely they will need long-term care services, but just over half have never looked into long-term care insurance. Most troubling is that 70% of respondents stated they didn't expect their family members to provide care. So if your family members aren't, that means you're going to have to pay someone. When asked to rate their concern on various aspects of retirement, 81% stated cost of healthcare was moderate to extremely concerning, followed by volatility in investment returns, impact of inflation, and cuts to Social Security. Interestingly, only 53% expressed at least moderate concern about running out of money, even though running out of money comes from all of the costs previously highlighted. So it's kind of interesting. The extensive survey covered various aspects of retirement knowledge, from understanding investments to how life insurance or annuities work in retirement planning, as well as when respondents plan to retire. When asked what age they plan to take Social Security benefits, 25% of respondents said age 62, the earliest age they can take benefits. However, 41% said they would begin collecting at age 66 or older, and 17% said at age 70. Finally, what do you know what age you want to take your Social Security? It can make a big difference. And do you know how that correlates with Medicare benefits? Finally, the survey asked about how COVID-19 is affecting investment behavior. And most respondents, 54%, saw no change in risk, while 39% were less comfortable taking risk. Further, 42% stated they have decreased spending due to the coronavirus, while 15% have increased the amount they are saving. Almost 40% said they made no changes at all. So overall, I hope this conversation brings you value. At the end of the day, the biggest challenge I would come from this article is one, short term, take the survey, but two, write down your retirement plan. Have a plan, right? And I'm sorry, but your group 401k is not a plan. That's just a product. That's a tool. It's something given to you that you are using, but it's not like an overall plan. All right. So I strongly challenge you to have a plan around the tools you have in place. And you talk to someone you trust. And if you don't have that person, as always, I would love to have that conversation. So thank you for your time in today's Money Not Math conversation. Please let me know what you think by liking, sharing, commenting on my post, and or reaching out directly if you want to have a conversation. Thanks, and I hope everyone has a great weekend. And if you're a Wild fan, keep your head up because there might be more trades to come. Thanks, and bye.